on to the extent of 24,768. Bank OD. Start point is OD as per cash book. Start point is OD as per OD balance as per cash book. Okay. Bank charges amounting to 350 had not been entered in the cash book. So what is your starting point? Starting point is cash book. Okay. Bank charges amounting to 350 had not been entered in the cash book. Not entered in cash book. Passbook they have entered. Add. Balance goes up because it is OD. Check amounting to 88,768 issued before, but not yet presented to bank. So cash book you have entered. Cash book balance increases. OD balance increases. So minus. One payment of 4,590 was recorded in the cash book as if there is no bank column. That means they have put it into cash column. Payment not recorded in the bank column. Passbook they have added. So you will also add. Okay. Company paid 15,500 to a creditor and received a cash discount of 2%. But cashier erroneously entered the gross amount in the bank column of cash book. Very common. 15,500 into 2%. That gives you 310. This is the discount. What the person has done? 310 is also entered in the 310 is also entered. Company paid 15,500 okay to a creditor and received cash discount. So actually they didn't pay this 310, but cashier has entered this also. So cash book what happens? Yes. So in cash book what happens? You have paid 310 rupees more, so you will subtract it. 310 rupees you have paid more, you will subtract it. A debit of 5,700 appeared in the bank statement for an unpaid check. Debit in bank statement which had been returned marked out of date. Check has been redated by the customer and paid into bank again on July 8th. Debit in the bank, that means bank, the balance has increased, OD balance has increased, you are also going to add it. Check deposited in the bank not yet cleared, that means cash book balance has decreased, so you are going to add it. Sorry, cash book balance, what has happened over here? One second. Check deposited in the bank, not yet cleared, deposited, that means what did you do? Cash book balance has decreased, you are going to add it. Next you have dividend, 1,980 collected by the bank, not recorded. Bank it is collected, that means it is going to be minus. Amount of 2,340 wrongly credited by the bank to the company account, for which no details are available, wrongly credited to the bank. That means passbook balance decreases, you will also decrease it. On 25th June 2024, the credit side of the bank column. Credit side of the bank column means payment side, okay, of the cash book was overcast. That means you put extra payment. Extra payment means balance increases. Now what you're going to do? You're going to decrease it. This should be your BRS, guys. This should be your BRS. Okay, students, let's go further. Next question. Okay, they have asked question number 3A, I think. They have asked this question for 15 marks. From the following schedule of balances extracted from the books of Mr. Piyush, prepare trading account and P&L account for the year ended 31st March 2024 and balance sheet as on that day after making necessary adjustments. Now if you see this question is exactly like Ganguly question. Ganguly question from your study material. Ganguly and Gavaskar question, if you take same adjustments are there. Capital, you know it will go to balance sheet. Opening stock, this will go to your trading account. Cash in hand, balance sheet. Cash in hand, balance sheet, you can take it as asset. Cash at bank, asset. Investment, asset. Deposit, asset. All 1/4/2023 from starting of the year it is there. Drawings, minus from capital. Okay, purchases, trading account. Sales goes to trading account. Returns inward. Returns inward is what? Sales returns. Sales return, okay, minus from this. Subtract from this. Returns outward is purchase return. Purchase return, what you're going to do? You're going to subtract from this. Carriage inwards, carriage inwards. This will go to trading account, direct expense. Rent will go to P&L. Salary will go to P&L. Sunday debtor is an asset. Sunday creditor is a liability. Bank loan 12% as on 1/10/2023. Be careful. They have taken the loan on what day? 1/10/2023. This is a liability. Furniture as on 1/4/2023. Asset. Interest paid. Expense. It will go to P&L. Interest received. Income. It will go to P&L. Advertising will go to P&L. Printing and stationery P&L. Electricity charges P&L. Discount allowed P&L. And then discount received will also go to P&L income. Bad debt P&L. General expense P&L. Motor car expense P&L. Insurance premium will also go to P&L. And then traveling expense will also go to P&L. Postage and courier also will go to P&L. Can you see same type of question was there in the study material as well? You'll see what adjustments they have asked. Value of stock on 31st March 2024 is 7,65,000. Closing stock. Closing stock what will you do? One trading account, credit, and another balance sheet. You're going to show it as asset. This includes goods written by customer on 31st March 2024. In the stock, the goods are included to the value of 25,000 for which no entry has been passed in the books. So what will happen? No entry has passed in the books means, can you see sales written here? Sales written will be 1,10,000 plus how much is the sales written? 25,000. So your sales written will become 1,35,000. And you can see your debtor here. Where is your debtor? Sundry debtor will become 2,35,000 minus 25,000. So your sundry debtor is 2,10,000. 2,10,000. Sundry debtor decreases, sales written increases. Sales written will be subtracted from sales in your trading account. Okay guys, next. Purchase includes one furniture item purchased on 1st January 2024 for 10,000. There was some steel table or something in your study material question. Depreciation at rate of 10% per annum is to be provided on furniture. Okay, so what we have to remember on this furniture, 10,000 into 10% into 3/12. That means 250 rupees depreciation. When you're calculating depreciation of furniture, remember this 250. Now furniture item includes one. Purchases includes this furniture. So what we have to do? We have to go to purchases. Purchases how much? 24,95,000. 24,95,000 minus 10,000. That makes it 24,85,000. That is your purchase value. Go to furniture. Furniture is 25,000. So 25,000 plus 10,000. Now your furniture has gone up to 35,000. But on the 25,000 you calculate depreciation for entire year. On 10,000 you calculate depreciation only for 3 months. 1 month's rent is outstanding. Okay, 1 month's rent. They didn't tell you where is the rent. Find the rent. 66,000. 1 month's rent is outstanding. That means 11 months rent is paid. 66,000 divided by 11. That is 6,000. 1 month's rent is outstanding. So outstanding rent will be 6,000. In the P&L what you will show? You will show 66,000 plus 6,000, 72,000 in the P&L and 6,000 will be shown as outstanding rent in the balance sheet. 12,000 is payable towards salary. Outstanding salary. What you are going to do? Find your salary. 1,15,000. 1,15,000 plus 12,000 you are going to add. Okay, then you are going to show 12,000 as outstanding salary in the balance sheet. Interest paid includes 9,000 paid against bank loan and interest paid includes 9,000 paid against bank loan. Can you see the bank loan here? 2 lakh. You have the bank loan as 2 lakh. 2 lakh into 12%. But when have you borrowed this? 1/10/2023. That means only 6 months interest will be applicable. 2 lakh into 12% into 6 divided by 12. So 12,000 is the interest. 12,000 is the interest. Okay, but you can see 9,000 is paid against bank loan. So 9,000 is paid. So you have 3,000 which is outstanding interest. 3,000 is outstanding interest. Can you see interest paid? 12,500 we have. Okay. 9,000 is, so what you will do? 3,000 you will add it to interest also and 3,000 you show it as outstanding interest in balance sheet also. Okay guys. And interest received pertains to investment and deposit. Investment and deposit. Can you see investment is there 50,000? So 50,000 into 9%. 50,000 into 9%, that makes it 4,500. Okay, then you have one more here, 3 lakh. 3 lakh into 10%, that makes it 30,000. So total becomes 34,500. Your interest is 34,500. Interest received is 28,500. 34,500 minus 28,500. You have 6,000 of interest receivable. 34,500 minus 28,500. 6,000 is interest receivable. So what you're going to do, this will be added to interest also, and in balance sheet you'll show it as asset. Clear? Provide for interest payable on bank loan and interest receivable on investment and deposit. We already provided this. Make provision for doubtful debt at the rate of 5% on the balance of Sunday debtor. What mistake you can take? Do over here, take Sunday debtor as 235 and calculate. No. On 210 you're going to calculate 5%. On 210 you're going to calculate 5%. 2,10,000 into 5% is 10,500. 10,500 is your provision for bad debt. Do we already have provision for bad debt in the question? No. Sir, there is bad debt in the question. Let it be, sir. Bad debt in the trial balance means already entry is passed. So PBT will be 10,500, 5%. Insurance premium includes 18,000 paid towards proprietor's life insurance policy. Oh. Insurance premium is there 30,000. Out of 30,000 you're going to remove 18,000. Only 12,000 will be debited to P&L, and this 18,000 will be taken as drawings. If it is drawings, it is going to be subtracted from the capital. Here, this was your 15-mark question. Trading P&L balance sheet. Easy 15 marks. Same thing we have solved in our marathon classes as well. Yes, let's go to P. X and Y are partners sharing profits and losses in the ratio of their effective capital. Ratio of their effective capital. As on 1st April 2023, they had a capital of 280 and 160 respectively on their in their capital account. X introduced a further capital of 20,000 on 1st June. 1st June he has introduced capital, okay, and another 15,000 on 1st October. So you'll calculate effectiveness from 1st June. The months you'll calculate from 1st June and from 1st October. On 31st January 2024, X withdrew 25,000. X withdrew 25,000. Now what year are they following? See, beginning from April. That means they're following financial year. So for this 20,000 from June, that means June, July, August, September, October, November, December, January, February, March. You're going to give 10 months weightage, 10 by 12. And for this 15,000 which you have introduced from 1st October, so 6 by 12, 6 months weightage. And this 25,000 which is withdrew on 31st of January, 2 by 12, and you're going to subtract that. You're going to subtract 2 by 12. Whatever you calculate 2 by 12, you subtract. And on 1st of August 2023, why introduce further capital of 30,000? August, September, October, November, December, January, February, March. 8 by 12 weightage you'll give for this 30,000. During the financial year, the partners drew the following amounts. Drawings are also there. X drew 5,000 at the beginning of each quarter. 4 quarters at the beginning of each quarter. Calculate. Y drew 1,500 per month at the end of each month. End of each month. So you can use the formula total into rate into end of each month. So 5.5 divided by 12. You can use that formula. As per partnership agreement, profits were to be shared in capital ratio. Effective capital, you have to calculate that. Interest on capital 12% per annum is allowable. Interest on drawings 10% per annum is chargeable. Clear? Calculate profit sharing ratio, interest on capital and interest on drawings. Is this clear, guys? Yes. Are you clear with this? Okay. I think same question is there in study material. A similar question is there in study material. Effective capital you calculate. Then
ये दवाइयाँ दे दोगे?
दादी वो